Hey, what's going on, guys? We got a special guest today, David Allred. Dave launched a highly successful 17-year career with Vivint, the nation's largest smart home security company. He's led over 100 sales teams across the country and contributed to both companies eventually going public with multi-billion dollar valuations. Dave now consults several small and medium-sized high growth businesses across the country, helping increase profitability and expanding their businesses through his executive coaching. Dave also created his unique lifestyle design program, focusing on living life fully with freedom and purpose. Creating value and inspiring others is his life purpose. And over the last 2 decades, Dave has mentored and led thousands of others to optimize their results and level up. Along with his wife and 4 children, Dave recently launched the Allred Family Foundation, which focuses on giving back and supporting multiple humanitarian causes. Dave's first started investing in real estate 18 years ago and has since scaled his business into a very impressive portfolio of multifamily and commercial real estate across the country. At age 30, Dave committed to building a portfolio with ownership of over 1,000 rental doors by the age of 40. Having executed this goal, he now launched Axia Partners, a real estate fund focused on creating wealth through recession resilient passive income. His passion lies in helping others inspire others to gain financial freedom through lifestyle investing, all things high adventure, and living life all in. Welcome, Dave. How are you doing today?
I'm doing great, Jordan. Thanks for having me, man. Excited to be here.
Yeah, we're super excited to have you on the podcast today. So tell us, Dave, 1,000 doors, super impressive, but where does this journey start for you?
I mean, where did it start? I would say I'll kind of back up from the beginning, I guess. I grew up in a small town here in Utah, population about 2,000 people, so really small. And grew up in a low income, very low income, blue collar home. We never really had a lot to speak of in terms of money experiences, talking about investments, etc. In fact, we never really talked about business or investing, but I knew I wanted a lot in my life, and at a young age, somehow I came up with these goals. I've always been very goal focused in my life, and I knew I wanted a high quality life for me personally, as well as my family, my future family. And I realized at a young age that freedom was a big motivator for me. In fact, I'd even say today, if you asked me, like, Dave Allred, what's your core motivator? Like at your core, what really fires you up, what motivates you and affects your habits and your decisions? I would say mainly it's freedom. Just having enough freedom to really do what I want to do in my life, and to be able to do life on my own terms, and really to do life with the people I want to be doing it with, when I want to be doing it, and where I want to be doing business. And so, that's, to me, that's really been kind of the ultimate goal. And so when I was going to college, they had a recruiting booth set up to go out and knock doors selling home security systems. And they had some donuts out on the booth. And so I walked over as a poor college kid, got a donut. And then they said there was going to be a recruiting meeting that evening at a pizza restaurant place, and they were going to have free pizza. So I'm like, okay, hey, I'm winning. I got free pizza in the evening. I got a donut here, right? Anyway, so they got my attention. I went to this recruiting meeting, and next thing you know, I'm out in Chicago, Illinois, out knocking doors, and frankly doing probably the hardest thing I've ever done in my life. It was so challenging, man. And the team, I mean, almost I'd say 80% of the team quit, and it was a 4-month selling season out there, and I'd never done anything like that before, and it was hard, man. Frankly, it's probably the hardest thing I've ever done in my life or my business career. Thought about quitting daily. I should say multiple times per day, but and the learning curve was pretty rough. It took about a month or maybe almost 2 months, halfway through the summer, until it started to click for me. But I'm really grateful for not having quit. I look back at that decision to keep on going, and it really changed the trajectory of my life. Was able to finish that summer strong, and I made about $31,000, which for me at that time in my life was crazy. Like that was blew my mind. I'm like, it's more than my parents ever made, and it was a huge amount of money. And So, it's enough to come back the next year, and I became a sales manager and ran a team, then regional manager, and then became the VP of sales for this company. And that company eventually went public for multi-billion valuation. Had an opportunity to manage about 123 sales teams across the country in 42 states, a few thousand sales reps. And then I went over to Vivint Solar, this sister company, and helped run the California market, selling residential solar systems. Did that for about 3 years, loved it. But the whole time I was really focusing on taking that active income from door-to-door sales and moving it over into passive income, right? And passive income just means that it's income that you don't have to do anything, you don't have to put more time or energy into it. It's just passive. I call it mailbox money. And so, again, going back to freedom, I was like, I don't want to be doing door-to-door sales or, in this industry my whole career. So how can I eventually pivot out of this into something I'm really passionate about? And for me, it's always been real estate. My second year, when I was a sales manager, I made, about $156,000, and I had no idea what to do with that capital. So I talked to my CPA and I said, hey, what are your wealthy clients doing with their money? And he said, they're all putting it into either their business or into real estate. And that made a lot of sense to me. And so I decided I wanted to really kind of just learn and master the game of real estate. And, so about 16, 17 years ago, I started studying real estate, got my feet wet, a lot of learning experiences to start out with, but it's been a really fun journey. I'm really grateful for having kind of been turned on to real estate earlier on in my career. So 2017, retired from, the door sales industry, and I've been full-time in real estate for about 5 years now. And it's been a fun ride. Yeah, anyway, I don't know if you want to jump into the real estate side of it, but
Yeah.
that's kind of the high level, walk through the last 20 years.
Yeah, that's incredible. And we'll start off with what even gave you the foresight? Because as you grew up, you said you guys didn't have a lot of money, and you're starting to make a little bit of money now at Vivint as a sales manager. I'm just backing up in the story,
Sure.
and to go out and buy that first property, because not a lot of people are looking at properties as, hey, let me invest. They're like, my goal was to buy a home. Like, you must have had much bigger goals than that. And what really triggered you to jump to that and think it
Yeah,
was
great question.
possible?
So what really, made me go in that direction was, well, one was freedom, right? I realized, just kind of you're going to hear me say the expression reverse engineer a lot. I'm big on just getting it clear on what you really want is an outcome, and then create intentionality and purpose around that. And then you simply reverse engineer those big goals and those big steps into small digestible steps. And that's really been a key habit for me in my life, in my career. And so, I realized I wanted freedom. I didn't want to be, knocking doors forever. And I wanted a lot for my family. And also I realized that with real estate, there's a lot of tax benefits, and I don't think anybody loves paying a lot of taxes. And so, it's a great way to be able to create a, tax deductible lifestyle and to be able to create a lot of tax efficiencies. And so, um, so I just, well, I'd also add that I've always been a big believer in what I call having a growth mindset versus a scarcity mindset. And, the difference in a nutshell would be, most people have a scarcity mindset, meaning that we kind of feel like we are where we are in life and it is what it is. And, it's a result of our parents or our circumstances or, the color of our skin or the opportunities that we were given previously. I actually disagree with a lot of that. I think that when we have a growth mindset, which is basically that we are in control of our lives, that life happens for us, not to us. And, where we end up in the future is really just an accumulation of the decisions we're making today. That's really empowering, man. But it's also makes you take a lot of responsibility and ownership for where you are in life. So I think a lot of people maybe don't like that because it creates more accountability, but it's really a beautiful thing because then you can start to make changes and live your life based on what you really want to create. And so, so backing up, Jordan, kind of your question was, what made me decide to jump specifically into,
Yeah.
multifamily and all these fourplexes in real estate. And I'd say it was just getting clear on those end goals, reverse engineering it, and realizing that real estate really is one of the most stable, consistent ways to create passive income and really to create generational wealth, right? So it's not just for me and my family now, but it's for future generations, for my grandkids. And I truly do believe that real estate is the best way to create generational wealth.
Yeah.
It, and maybe one more quick thing on that is where it really came down to. I would hold these, I called it one-on-one performance interviews with my employees, and we'd sit down 20 minutes and just talk about, why they're doing this job, what's their holy cause, what's their purpose, what do they really want to get out of it. And I realized that most of these guys, they always have like a knee-jerk reaction. Like, I want to get a new sports car. I want to, pay off my student debt. I want to become wealthy. I want to, a new house. But when you dive into more detail, it got very fuzzy and ambiguous very quickly. And I realized a lot of guys don't really know what they want in life. And I realized that, hey, if I'm a sales leader and my primary responsibility is to lead these people, I should really know first and foremost what I really want out of this job and out of this opportunity. And so I took some time to get really clear on that on a personal level. And it's turned into this process I call lifestyle design. And I basically took the 10 different areas of my life that I feel like are really important and that I want to be great at. And I put them on a spreadsheet, and I just got crystal clear on what I want in my life in each one of those 10 categories. And then again, reverse engineered that down to the daily habits that I need to have in my life to make sure that I'm winning in all 10 categories, right? Because a lot of guys are winning in one category. Maybe they're killing it in
Yeah.
business or finances or their health, but then they neglect other parts like their relationships or spirituality or, their time management. And so those 10 areas I came up with are, number one is my mission statement for my life. Number two is my health. And then it's my time, my family, my business, my finances, which are different from business. It's my experiences, spirituality, relationships, and memories, or the fun, the bucket list I want in my life. And so taking time to go on through all 10 of those has been really powerful exercise because it helps me to feel like I have a more balance in my life and that I'm not neglecting, different parts like my health or my relationships.
Yeah. And I am a big proponent of figuring out the lifestyle you want. So I completely agree with you, Dave. And for you, building out this, how often are you checking this? Because we can all write down a lot of goals, and it's amazing. You're like, oh, in 10 years, I'm going to be here. And I was talking to, I have a personal development group, and I was talking to them yesterday about this of, hey, everyone sets a New Year's resolution. Do we know that 80% of them fail after a month? It's because people aren't held accountable and they're not seeing the progress towards it.
Yeah. And what I'd add on to that is that a few things. One is that there's a lot of power in writing down your goals. And in fact, I heard a stat yesterday that only 3% of Americans write down their goals in writing. So I think there's real power behind that. And, I heard another statistic that 42% more likely to achieve your goal if it's in writing, if you take the time to write it down. And with that said, I don't know where those stats come. I mean, I've also heard 67% of stats are made up on the spot. And so but either way, for me, it's been really powerful to write those things down because for me, what it does is it allows me to hold myself accountable so I can look back at it later on, but also it helps me to see the incremental improvements that I am making in my life. And otherwise you just kind of get used to those improvements, right? You don't see the contrast. And so I would definitely challenge your listeners to always write your goals down, like make it a best practice. And the second thing that I would share on that is, I've learned that I think most people overestimate what they can do in a 1 year period, but they underestimate what they can do in a 5 year period. Right. So we all set these lofty goals for the year, New Year's resolutions, and very, very 80% of those just get forgotten about. Right. And it'd be interesting to see how many actually achieve those goals. It's probably less than, than 10%. And so to me, it's more about the long game. And so, when I set goals, I always set 1 year goals, then midterm goals, like a 5 year time frame, and then my long-term goals, which is in my life. And so, I think it's important to write those goals down. But what I found is that most people kind of meander through life just reactively, right? It's based on whatever's thrown at them on the day or how they're feeling emotionally. And what I've really found is that if I can get clear on what I really want at the end of the day, how I define a successful, meaningful life, then it makes my decision making so much easier along the way. A lot of people are like, Dave, isn't it scary like how big gone with some of your deals and your projects and how quickly, you've been growing your businesses. But I would say I'm actually very confident and very bold in my approach because I know what I want at the end of the day. And I know what I also don't want, right? Which is really important. A lot of times we focus so much on what we do want, but we really don't think about what we don't want in our lives. And, in fact, if I kind of circle back to chapter 1 of my lifestyle design, which is my mission statement, it's an entire paragraph of exactly what I want my life to stand for. And the next thing on there is I have my 10 guiding principles for my life. And then I have my 10 core values of what I want my life to stand for. And then I have, 5 non-negotiables. So those are 5 things I will not do in my life, right? Like I will not put my family first. I'll never put money over relationships, et cetera, et cetera. I'll never trade time for money. It's just something I decided on. I'm not going to make decisions based off of fear. There's a lot of things like that. Anyway, so taking the time to go through that's been really powerful. And then lastly on that, I wrote my eulogy, which is kind of fun. If somebody's struggling to figure out what at their core, what their motivator is, and what they really want in their life, imagine you're at your funeral, and what do you want your family, your friends, your neighbors to say about your legacy? And that really helped me to get really deep and clear on what I really want in my life. So anyway, just writing that stuff down and getting clear on it's been really powerful.
Yeah, and that eulogy activity is such a powerful one because that's the biggest reverse engineering of them all. Because you want to
Absolutely.
see what your life is going to be like backwards. And the thing is that we don't realize most people end up living 75, 80. Like that's a long time. Some people are 90, 100, 105. Like people are living longer and longer lives, and we're always trying to get everything in. Let's see what we can do in 3 months. Let's see. The long game is really the way it's played. And for you, you started investing in real estate, and you were still working this Vivint job for a while, even with buying all the properties. What was the thought process around that? Were you not at a point where it was good to go?
Yeah, the thought process there was, I think you should never leave something that's really good when you're making great money and and frankly, I loved the job there because it wasn't just about making money and even selling. It was actually more of a leadership role where I was working with hundreds and thousands of salespeople, young, ambitious go-getters, and to be able to help create real meaningful value for them and help them, kind of help create leadership opportunities for them to step up, and then seeing that trickle effect or that ripple effect from them becoming better sales managers and leaders and then creating value for more and more people. It's been really fun in my life to be able to, like, for whatever reason, like creating value for people is awesome. Like I love, nothing gets me more jacked than just knowing I've been able to create value for, hundreds, thousands, hopefully millions of people. One of my key goals in my life right now is I want to help create direct value for 10 million people and help 1,000 people become millionaires through real estate. And so like just, creating values, I don't know, it's awesome. It's probably actually selfish because what I've learned is like the more I can actually kind of, give or help and create value, it always comes back full circle, and usually 2 or 3x. And so the more you can create value for other people, then the more it actually benefits you long term. And it kind of sounds selfish, but that's kind of that's what I've noticed in life. And my favorite quote is Zig Ziglar, and he says, "You can have everything you want in life if you help enough other people get what they want." Right? And it's such a beautiful quote. And lastly, we just launched the Axia Real Estate Fund in 2021, and when we came up with the name for our real estate fund, we chose Axia, and Axia is Greek for to create value, to add value.
Yeah.
And
Oh, I love
so,
that.
yeah,
Yeah, I love that. And for you, before we jump into Axia, I know you did a lot with fourplexes, and we'll talk about fourplex for a little bit, and then we'll move back to Axia. What was the rationale behind a fourplex? Why did you think that they were the best direction to go? And it was fascinating. Just learning about you and just hearing about all the fourplexes.
thanks, man. I
And what?
appreciate it. Yeah. So, so,
Yeah,
so the reason why I love
the
why I love
yeah, the
fourplexes and I
last
still love four.
yeah.
Go ahead. Go ahead.
Yeah, and the last thing I was gonna add is, what are your kids' goals before going to college? Because I this one blew me away.
Okay. Yeah. So fourplexes, the beauty of a fourplex and a fourplex basically, I mean, it's four different units, and the ones that I've done like 26, 27 fourplexes now.
Wow.
And thanks. And they're usually like, they're basically townhomes that are, combined, four of them. So there's two or three stories. And anyway, so what I love about it is you're still able to qualify for residential financing because four doors or less is considered residential, five doors or more is considered commercial. And so with residential, you get some really good terms, 30-year fixed interest rates, amortization schedules, et cetera. So the financing is better. And then the real beauty of it is you have four streams of income. And so even if you have one tenant move out, you still have 75% of your rent coming in, which should be enough to cover your debt service. And so it's just a little bit of a lower risk profile. Whereas if you have a single family home and you have a vacancy, you're literally not just cash flowing, but you're negative cash flowing because you have property taxes and insurance and maintenance costs, right? And so it just kind of creates more of a diversification with more streams of income. Also, with that, you have, well, there's so many benefits to it, but most of the ones that I've done have been new construction. So by the time that we actually build the fourplex, they're worth at least $100,000 to $200,000 higher than what I originally went under contract for. And the cash flow has been amazing. But then I can also take the tax benefits through what's called the cost segregation to be able to get accelerated depreciation benefits. That was a mouthful, but if you understand real estate, you get that. So you get all these tax benefits, and I can strategically use those each year to help offset my income based on whatever my income is for the year. And so it allows me to be very flexible with my tax planning because of the size of a fourplex is it's kind of a medium size where I can I can get those tax benefits, or I can defer that for the following year if I'm gonna have higher income the next year. So anyway, a lot of tax efficiencies and advantages there. But then what's been really fun lately, man, and I'll share this real quickly, is actually then when I 1031 exchange those. If you know what 1031 exchange is, it means you can sell a property and move those proceeds into a like kind or a similar type of property, and it's not a taxable event. So you can move all those proceeds into the next property. And so I want to share this for anybody that wants to get into real estate, or maybe they already have their feet in it, have gotten their feet wet. When I first started, I bought, four condos and townhomes. Let's say they're about $100,000 a piece. After a few years, they actually appreciated being close to $200,000 to $250,000, in value. And
Yeah.
so what I did was I would sell one of those and 1031 exchange that equity, so $200,000, into a fourplex. And on average, a fourplex right now costs, say, $800,000. You got to put about 25% down payment, so 200,000. Okay.
Yeah.
So I bought one condo for 100 grand. Now it's worth 200 grand. I'll 1031 exchange that into a fourplex and with no additional cash out of pocket. Okay. And so now I own four doors and an $800,000 asset when originally I just had a $100,000 asset. Okay. So
Wow.
it's an amazing way to be able to scale quickly that way. And I've done that over and over and over. And then I bought these fourplexes in 2014. I bought them for $500,000 at that time. That's how much
It's
but now
insane.
they're worth, yeah, now today they're worth, let's say, $1 million. And so now I can 1031 exchange that fourplex with, $500,000 of equity into three more fourplexes, or into a 20plex or 60plex or a large multifamily apartment complex, right? Without putting more money out of pocket into the deal. And so I call it velocity of money. And I've done a dozen of those 1031 exchanges in the last year or two, let's say the last 2 years. And it's always about that equity and making sure that equity is working for you. And so you're rolling that forward. And again, I call it velocity of money. You don't want to just have it sitting there. You always want to be moving it forward. And it's been an amazing way to be able to really create scale and add more doors. And so that's the beauty of the fourplexes. To go even deeper on that, I can actually subdivide those now. So say a fourplex is worth $1 million. I can go into the city, hire a civil engineer to go and subdivide those into either individual townhomes or duplexes and create, I don't want to create competition for myself here in Utah, but by doing that, it's been incredible how much more I can sell an asset for by subdividing it into smaller, more digestible, price points for the buyers.
Oh
And
my
so that's just,
goodness.
yeah. So, I mean, as a quick example, real world, So one fourplex I bought for $500,000 back, 5, 6 years ago is now worth $1 million if I sell as a fourplex. But by simply subdividing it into two duplexes, I was able to sell each duplex for $650,000. So that's 1.3 million. So we created $300,000 of additional equity and value simply by spending $600 to have it subdivided into two duplexes. Why is that? Probably because there's a big demand for people that they can afford, a $650,000 multifamily rental property, or they want to live in one unit and be a landlord to the adjacent property, right? So there's a lot of ways to do this, but what I've learned about real estate is it's like a chessboard, and it's really just kind of mastering the game of money. And it's really fun, man. The more you get experience with this and you get kind of creative with it, and from those fourplexes, then the next step was to jump into syndications, which is raising capital for large multifamily deals. And so I've done about a dozen of those. Really love that because I'm creating value not just for myself, but for my friends and people that I care about, and bringing them into these commercial deals. And that's what actually led me to go into the fund world, the real estate fund. Is now I'm able to create value for hundreds of friends and people I care about, and creating value and opportunities to come into these really large, national commercial multifamily assets.
Absolutely. And I know we could talk about fourplexes for an hour, but I know your time's limited. So what's going on with Axia? What is this? I know you started it last year. Does that mean you guys are slow and steady, or are you guys off the gun, coming fast, buying a
Yeah,
bunch of
yeah,
stuff? What's going on with
yeah.
it?
No, it's been fun, man. It's been a wild ride, but it's actually gone a lot better than expected. I wanted to. I just remembered you asked a question about with fourplexes with the kids. If I can just
Oh yeah,
back
yeah.
up real quick on that one, because that was a fun question. Um, really big fan of these fourplexes. So one thing that I want to do is I used to invest into an education fund for my children, like they call them like a 529 education plan. But the more I really studied that and understand, just economics and finances, I've changed that approach to where what I really want is I want each one of my children to be able to own a fourplex. And I think that, to own real estate and to eventually own fourplexes, I think that's a great way for them to be able to pay for college with that, with the recurring income. And then also just a way to be able to teach them about real estate. Again, growing up, we never got a chance to talk a lot about investing and how money works. And so I really want my kids to understand that. And so, we have if you ask any of my kids, like, hey, what's the best type of income? They'll say it's passive income. Like I've ingrained that in them. They're all employees of my real estate company. And so I pay them a wage to help me out so they can understand, I think kids learn
And
best, not from telling them, but from actually observation.
absolutely. And real quick, how old are the kids that are employees of the real estate fund?
Yeah. Yeah. Great question. 7, 10, 13, and 15.
My goodness, I love it. And then we could dive into the
Well,
philanthropy a little bit, but
yeah.
I
Well,
know you
also,
want to. Yeah, go.
yeah, there's a lot to go through. Maybe have to do another one of these podcasts sometime around too. But one thing that's cool about having your kids as employees is not only are you teaching them and showing them, how you do business and how you approach, life and money and business, but it's also a great tax play. I'm not a CPA, I can't give tax advice, but you can pay an employee up to 12,000 and 12,500 a year.
Yeah,
And as long as it's below that, then they don't have to report that as income. Right. And then as the business paying that, that's a wage that is also tax deductible. Right. So you're
yeah,
actually able to pay, an employee like that. And there's no taxable event there for either. So it's a win-win for both sides from a tax perspective. Um, so that's kind of fun. But then also, so with my kids real quick, so I pay them these wages and, but then it's very systematic where 60% of the money goes actually towards saving for, college or education or real estate investing. And then 30% is whatever they want to use it for. It's discretionary, no questions asked. And then 10% goes to giving back. And so, I pay them a healthy wage. And then that's how that money is allocated. But it's been really fun, man. I got my kids into, I mean, they own some cryptocurrency, they own some real estate. They've got their own, their Disney stock or their, Nike stock, whatever, like they're into, so that they can actually be passionate. Like, it's the
it's
brands, the
fun.
stocks that they love. Yeah. It's fun for them, and having some cryptocurrency in there is fun because it creates more volatility where they can actually see their portfolio move up and down as they invest. And so, and again, it's not really even about money per se, because I don't want my kids to be, too focused on money. It's more about teaching them how they can make money, uh, to make money, create more experiences and create opportunities for them in life, and just how to manage it. Unfortunately, in our public
Ab-
school systems, there's no formal education. It's
I,
crazy to me, man. It's
I,
sad.
I completely agree. I have helped the amount of people that I've just, hey, let's set up this account. Let's set up this account. Let just throw $100. It is what it is. And you just get to see it go up and down and you learn about it. It's so powerful. So tell us real quick, because I know the time's winding down. What's going on with Axia? Whoa,
Yeah.
how did,
Yes. So Axie is something that I've been passionate about for a while now. I've always, my approach in life has always been, I always want to do bigger deals than yesterday. So,
yeah,
whether that's starting with condos, then fourplexes, and then, small multifamily, and then going to large multifamily, then syndications, and now the fund. And, to me, I feel like that's how I found I'm most happy in my life when I'm making forward progress and I'm kind of pushing myself, become the best version of myself. And so
yeah.
the fund made a lot of sense to me. And what really drove me to creating the fund is when you have a fund, you have multiple assets in the fund, so it creates a lot of diversification. I feel like we're in we're 12, 13 years into this amazing housing market, and everything's cyclical. It's not a matter of if there'll be a correction, it's when that's going to happen. And so my approach and the investment thesis was, okay, how can we create a very low risk profile where there's low risk of loss, but still create high yield or high return on investment for our partners. And so I came up with the investment approach of investing in multifamily apartments, RV parks, and self storage, because those three assets have been proven historically to be very recession resilient. And so that's all we invested in. And so we raised about 50, $60 million of assets under management that we acquired this year. And and it's been received very well. We were oversubscribed quickly, and we have a phenomenal team in place. And what I'm really excited about is looking forward into 2022. We're launching a $50 million fund here in the next month, and then we'll have several subsequent funds launched as well in 2022. And just really excited about it, man. It's been a fun way to be able to create value for hundreds of people. And one
Yeah.
thing that I'm really excited about with Axia is I call it experiential investing, and it's a different approach. I've never seen any other real estate funds adopt this. And what it means is we're big on education. So it's not just about, hey, come invest with us, and we're going to help you get a return on investment. It's actually trying to help teach how we do what we do. And so
Oh,
we
wow.
pull back the curtains, and so our investors can actually see how we do our due diligence. When we walk a property, they're actually welcome to come out and walk it with us. How we do our financing. It's a very open book policy. And every month we do a webinar, experiential webinar, where we have the industry leaders, top guys in the industry and the nation jump on and teach, how we do real estate. And so it's just really about, not just giving him a man a fish, but teaching him how to fish, because
Yeah.
ultimately most guys want to be able to know how to do this on their own. And so it's been a fun way to really create value in an unexpected way, and it's been received very well. But yeah, just really excited about that, man. So the whole focus on Axie is recession resilient, passive income, a lot of tax benefits there as well and whatnot. So
And
yeah, man, just
this,
it's been a project, and it was a big bite for me. Sorry, it was a big bite for me
yeah.
for sure, but it's been awesome. Been really grateful for the opportunity.
Amazing. And this might be a silly last question, but with everything going on with kind of the chaos in the world, obviously we have a lot of stuff going on, inflation's through the roof. Does that have any effect on it? Like, is this a good thing or a bad thing for the real estate? Like,
Yeah, great question. I'll try to keep this down to a minute or two, but inflation, we are in an inflation environment right now. And, the news are saying it's, 4, 5, 6%. In my opinion, it's actually double that. If you look at real, true inflation with gas, food included, everything else, like a true bucket of how we measure that versus how the
yeah,
Fed measures it with a very limited basket of goods. I think we're at least double that right now. And so, again, I think real estate is one of the very best inflation hedges. And here's a quick example for fun. Okay, so we just closed on a 237 unit apartment complex a while back, and our interest rate is fixed at less than 3%, and it's a fixed interest mortgage for 35 years. Okay. So for 35 years, we borrowed, I think it's $15 million borrowed, and that's a fixed interest rate. Okay. So our payment is whatever that is, and it's not going to change for the next 3 years. With inflation, okay, let's say it's at 6% today, be super conservative. We're already
Yeah.
winning, right? So we're paying 3% on this money, but inflation is at 6%. We're already doubling up on that. So the arbitrage play there is really powerful. But also historically, as inflation goes up, rent rates go up as well, and real estate asset prices go up as well. So the assets, all this real estate is going up in value. The rents received every month are going up in value, and the interest rate's so low that we're already making money on that through arbitrage. And so that's a simple example of inflation. And I really do believe that there's not a better hedge against inflation than being invested in real brick and mortar real estate. Where I'm at today is I used to be really worried about debt and taking on leverage. My philosophy there has changed a lot. I actually want to, if you ask me like, Dave, what's your goal today personally in real estate? It's, I want to own and control as much real estate that I can possibly own without circumventing positive cash flow, and while having fixed long-term low interest debt. Okay.
Yeah.
So the interest rate's fixed. It's not going to go anywhere. It's not variable, and it's cash flow positive. I want to own as much real estate as I possibly can, because the last little thing I'll share here is there's 4 ways to make money in real estate. It's cash flow, it's appreciation in the markets, it's depreciation, all the tax benefits, and then it's principal reduction. So every month people are paying down, basically my tenants are paying down our mortgage every single month for us, right? So those are
That's
4
great.
powerful ways to make money. And so the more you can control, more real estate that you have under your belt, then all 4 of those will help you create wealth a lot faster, and it's automatic. People come to me like, Dave, hey, how can I become a millionaire in real estate? My answer is actually very, very simple. Just buy at least 1 property per year. You acquire 1 property per year. Eventually, with the cash flow, the appreciation, the depreciation benefits, and the principal pay down, you're going to become a millionaire. So it's really that simple. But the key is discipline. It's knowing what you really want, having that, that clarity, and then approaching it with intentionality.
Yeah, I love that. So, I mean, the big takeaways from this podcast are definitely write down your goals, figure out where you're going, and 1 property a year. And if you guys are interested in learning more about Axia and Dave, where can they find you? Where's the best place to find all that?
I'm definitely most active on social media. So Instagram, any of the socials, just Dave Allred. Pretty easy to find. So just say reach out send me a DM. Also, axiapartners.com is our website. My email is dave@axiapartners.com. And yeah, I'd say Instagram is probably the best place.
Yeah, I'll put that all in the link. Dave, thank you so much for your time. I really appreciate it, man. This is
Jordan,
awesome.
appreciate you, man. Thanks for having me on. And yeah, maybe we have to knock out a round 2, because I thought we were just getting warmed up today.
Yeah, I'm looking forward to it. Awesome.
All right. Thanks, brother.